prop tech firms hit reset as real estate industry struggles. That is according to the Globe and Mail.
They really do know how to write those headlines to get your attention, eh?
If you haven't guessed, we're talking about prop tech today, but I can't really tell whether or not it's going to be a good episode or a bad episode based on that headline.
Quick scan here. Apparently, some data point is down like 62.5%. So I'm curious to see what that is. What will the fate of Canadian prop tech be? Is it coming alive with new energy, or is it stumbling along like the rest of the real estate market in Canada?
Let's find out. But before we do that, a quick plug. Check out realist.ca for our free online and in-person meetup community of over 6,000 members across the country. You can see our paid event schedule that we also are doing across the country and access exclusive beta testing for some new technologies in the prop tech sector that are being developed for this industry.
In addition to our free course resources, you'll also find a paid online course, which is now offering a low ticket monthly option for group coaching only. So you can meet with like-minded people every week and continue developing your skills.
And as always, we do have a higher ticket option for those looking to really get some deals done this year. And if you need one-on-one coaching, we are here for that. We've literally helped hundreds of clients across the country in the last few years, Dan, and I have a ton of fun doing it and want to keep on helping you. So if you're listening, this is your call to action to reach out to us. Now, let's get into the episode. I just cracked open the article here, and it mentions two friends of the show, Colliers and, of course, PropTech Collective.
And jumping further into this PropTech Collective report, let's talk a little bit about some more of these companies, but also just like generally the market in Canada. So it's really interesting, if you're a real estate investor, you're thinking location.
It's all about location.
Thinking jobs, maybe where are all of these jobs? 80% of PropTechs in Canada are located in the top 5 hubs, including Toronto, Vancouver, Montreal, Calgary, and Kitchener-Waterloo. And Nick, give me a more detailed breakdown on that in the province count here, because it's pretty crazy, the concentration in Ontario and the GTA.
Yeah, so here in Ontario, 294, so 56%, and then 45% of those are in the GTA. BC also has a pretty decent startup community out there with 96, so that makes up 18%. Quebec, 69, 13%. Alberta at 50. I thought we see more out of Alberta, but
yeah, I always like Calgary does always feel like a prop tech city. Like I always hear about it.
Just because it's young and yeah, but I don't know. Maybe we're still young. 9% there. Prairie provinces make up 2% with only 8. Again, hoping to see more out of the prairies, and Atlantic Canada, hoping to see more from that region as well with 10, so making up only 2%.
And age-wise, a third of Canadian prop tech companies have emerged in the last 5 years, showing significant recent growth and innovation in the sector, despite obviously the real estate market being a challenge.
Exactly. Just wait until we're in a rip and bull market again, baby. And holy, I can see this industry exploding. Now, this wave of new companies demonstrates continued entrepreneurial confidence in the prop tech space, even as the broader real estate industry adapts to, let's just be nice and say changing market conditions and not the utter roller coaster of volatility that we've been on over the last couple of years.
Yeah. And, that is a really good point, because the real estate industry is so often criticized for being slow to adopt to new technologies and clinging to these old traditional methods. It's often called one of the last industries to truly digitize and modernize its processes. And I think we are finally, I don't want to jinx it, but I think we're finally starting to see it happen now, especially with AI, like with the work that we're doing at Valerie in replacing a lot of the processes of a realtor with AI. I think you're starting to see it happen.
Yeah. And Dan, when we were just at Buzz Conference, we were talking to the founder of Mave, and obviously AI is just such a thing right now, such a buzzword right now. And I think it scares a lot of people. I think it excites probably an equal amount of people. And those people that are scared, I think It's just about understanding how to utilize this stuff. And that's the thing with a lot of these prop techs. It's not, don't look at this as this is going to take my job. Look at it as, this is going to help me do my job better and save me time, which is really what we're all after, right? So 77% of Canadian prop tech companies were founded in the past decade, but the numbers are declining in line with how the real estate industry is slowly starting to decline. So 2024 was the lowest year since 2013. That, as an entrepreneur and someone that really believes entrepreneurial efforts are something that almost everybody should try, that makes me a little sad. So I'm going to go read the amount of prop tech startups from 2012 all the way to last year, 2024. And you'll kind of see the ups and downs we've seen here. So back in 2012, remember, this is a long time ago at this point, okay? 2012, I know it doesn't feel like a long time ago, but all I ever need to do when I want to look at how old some of this stuff is go look at like the top songs that were out at that point, and you're just like, oh man, I'm getting old. That was a long time ago. 2012, there were 16 prop tech startups. 2013, there were 19. 2014, we jumped to 27. 2015, we jumped to 37. 2016 to 43. 2017, 42. 2018, 52 prop tech startups. Great year. 2019, 48 prop tech startups. 2020, banger year for the prop tech community with 57 prop tech startups. And then 2021, we fall off a bit of a cliff at 37. 2022, 28. 2023, there are 30 prop tech startups. And 2024, last year, there were only 20 prop tech startups.
It is it's a bit of a wave, right? And even in 2017, you could see that that dip when, like, from 16 to 17, when, because 2017 was a shaky real estate market, so it's probably correlated with real estate market production. It would make sense. The wave of prop tech innovation is forcing even the most traditional players to reconsider their stance, right? Like, think about the commercial real estate world. Companies like Colliers, who now have labs for prop tech.
Yeah.
CRE, if you're, I think most people listening to the show would be more like your residential, etc. And CRE is just a smaller market compared to the residential market. And CRE, commercial real estate, has historically, if you think like the regular real estate market is archaic, this is prehistoric when it comes to tech. Really, it was, right?
Like, totally,
very much
yeah.
so, yeah.
Yeah.
And companies are now realizing that staying competitive means embracing digital transformation, whether that's through virtual tours or blockchain for transactions or AI powered market analysis. Like, there's so many new tools.
And now we're seeing more technology go into the commercial space, right? About 42% of the prop techs that we're mentioning, the startups, 42% of them are to serve residential, 16% are to serve the construction side of things, and 42%, so almost half, are there to support the commercial real estate industry.
And the real estate industry has historically thrived on what I would call information asymmetry. I've mentioned this a couple of times in the show, particularly in the brokerage space. Agents and brokers held exclusive access to crucial market data, comparable sales, and property insights. However, with the rise of prop tech solutions and digital platforms, this traditional barrier is rapidly eroding. Think about House Sigma as an example. Like, most sellers already know what their house is worth, or approximately, right? They don't need the realtor to really do the price discovery for them.
Yeah, that free home evaluation kind of has gone out the window a little bit.
And it's cool. Like at Valerie, we have like ours actually will pull the comps for you. Like, it's not just an AVM, right? Like, every site has an AVM. It's kind of a run of the mill thing, but on our site at valerie.ca, like, ours literally will say, here's the 3 comps that we use. And it uses computer vision to compare kitchens and bathrooms and all of these things to actually find like the most granular ones. So like, that space is developing very quickly to the point where pricing is something that a realtor probably still can do, but maybe shouldn't, right? Like, that's a role that you can probably eliminate for agents. And look, like, this ultimately ends up having a better result for the end user, because people want to pay less, right? Like, everybody thinks realtors are overpaid, and the only way that realtors are going to accept lower rates is if they have to do less work, quite frankly. And so if we can eliminate a lot of the jobs, then they will, right? I mean, many will also accept it because they have to, and that's what you're also seeing right now. But in a busier market, agents will accept less money for less work, and so eliminating the jobs allows them to continue to be competitive in a declining fee environment. And who wins in that? The consumer, right? It, innovation is deflationary in that way. We've mentioned that a couple of times
Mm-hmm.
before. Consumers now have unprecedented access to market data as a result of this. They have property histories, valuation tools, and this fundamentally changes the role of real estate professionals from gatekeepers of information to now expert advisors and negotiators and customer service providers. And this democratization of information is forcing the industry to evolve and find new ways to add value beyond just providing access to data, which is a good thing. It's a significant shift that I would say is reshaping how real estate transactions are conducted and how professionals serve their clients. And it is going to be an unrecognizable industry, I think, in 10 years.
I agree, and I welcome that. That excites me. Now, another exciting thing is the Canadian Proptech industry has demonstrated significant consolidation and growth. So there's been more than 65 mergers and acquisitions taking place across various segments of the market over the past 5 years. And this shows a strong appetite for strategic partnerships and market expansion. Now, in a testament to continued investor confidence, the Canadian Proptech sector, um, companies in this space have successfully secured almost $1 billion in funding, right? $800 million last year, representing a substantial capital inflow to support innovation and scaling operations in the property technology landscape. So that is also a very good and kind of evolving thing.
Now, to be fair, if you half of that was HostAway's, more than half of that was HostAway's $500 million growth round, which, so if you strip that out, that's where you get that 65% decrease in,
Mm.
or 62.5% decrease in funding. But, and HostAway is a Toronto based vacation rental management software that helps property managers and hosts automate and scale their short term rental businesses. So, like your Airbnbs, providing a centralized solution for managing listings, bookings, guest communications, and analytics. Their growth round marked one of the largest funding rounds in Canadian PropTech history, and they are the largest funded Canadian PropTech, I believe, as well, which we're going to get to that list in a second.
Yeah, so before we get to that list, let's look at I just mentioned, right, all the M&As happening in the last 5 years. And the space is pretty active, right? So let's look at, we'll take the last 5 years and we'll look at the number of acquisitions per year. In 2020, there was 6. In 2021, 17 acquisitions in the PropTech space. 2022, 11. 2023, 8. And last year, a whopping 18, with the majority of these being bought by U.S. companies, about half of them, and the remainder by Canadian acquirers and some other countries. So kind of a bit of a mixed bag there. Unfortunately, not all the good stuff stays here in Canada.
Yeah, a lot of Canadian tech does get purchased and then scaled to the U.S. market, right? So, I mean, it is interesting. Like, and this is something we go through at Valerie as well. It's like if you can win in the Toronto market, then you can be scaled to other markets because it's the most competitive market in the world, most realtors per capita in the world from a real estate perspective, right? So the top
Yeah.
M&A stories are interesting. Looping it back to Colliers, there's a couple of ones here that are cool. Like I think these are companies that you might have heard, or companies that as a real estate investor you might have interacted with. So Colliers bought Englobe, which was a significant entry in the engineering marketplace, and trying to add a new professional service offering to complement their core business as well.
Yeah, this next one surprised me a bit. Carson Dunlop. Cooperators' acquisition of Carson Dunlop strengthened its home services portfolio, supporting its mission to build sustainable communities. The move enhanced their ability to provide homeowners with trusted advice, inspections, and industry-leading expertise. Now, Carson Dunlop is not a person. It is one of North America's leading home inspection companies and education providers. Founded back in 1978, they're known for providing comprehensive home inspection services and developing educational programs for home inspectors. Very, very crucial part of the real estate industry here. They also create technical publications and software solutions for the home inspection industry.
Yeah, I mean, if you're like in the GTA, typically if there's a pre-home inspection, the most trustworthy name, like people expect to see a Carson Dunlop pre-home inspection usually. So that's That's an interesting one. Another crazy one. This one's huge in the mortgage space.
Yeah.
Nesto, which we met the founders of Nesto at Tal Schwartz's event there, I can't remember, it was the fintech event, yeah,
Yeah.
and because he was on a panel there, and Nesto bought CMLS, so
Crazy.
yeah, Nesto's acquisition of CMLS private mortgage lending platform creates Canada's largest tech-enabled lender. The combined entity will lead both residential and commercial mortgage sectors. So
And
huge.
Dan, you being on the real estate side, me being on the mortgage side, and us both having a background in, a bit of construction and commercial real estate, I can tell you right now, the mortgage industry is just as archaic as the construction industry, the residential, the commercial industry, right? But let's keep going. Another one back in December of 2024, so not long ago, Train acquires AI and SaaS HVAC management platform. The acquisition enhances Train's it's TRANE, Train's advanced building management and digital capabilities, building upon the company's existing collaboration.
Is it the same train like the air conditioners?
Exactly, it is. If you've looked at any meaningful amount of properties, you've definitely seen a Train air conditioner unit outside of a house before.
You know what they say about trains, right?
Oh, is it already time for Dan's bad joke of the day segment? Because I don't know if I'm ready.
You can't stop a train, baby.
Does anybody actually say that?
Dude, I've literally had more than one of my HVAC friends say you can't stop a train to me before.
Okay, fine. Fair enough. Fair enough. Back in November of last year, November of 2024, Intact Insurance acquires Jiffy, a home maintenance platform. This acquisition will enable Jiffy to accelerate its service expansion across new jurisdictions while advancing Intact's digital engagement strategy.
Building Stack, property management platform, merged with RentSync. This integration marked a significant step toward offering an all-encompassing list-to-lease solution for rental housing.
So from here, let's go into some of the report's construction trends. And there's a lot of great other pieces that we're going to go through: engineering, residential. So let's move over to that side of the report. Modular and offsite construction labor shortages are driving new